Welcome to FX Street Currencies in Play, where I'm joined by Ryan Littlestone, who's an independent currency strategist. How are you today, Ryan?
Not too bad, yourself?
I'm doing well. Is there anything exciting now? We've been overcome by the heat wave here in London, or not?
Yeah, I think that's it. We could have had a little shock from the Macron win, but the euro was bid up on that, but not as much as it was when he won the election first time around.
So a bit of an old story there.
Yeah, a bit of a non-story in that one.
Okay, let's have a look at what we've got on screen at the moment. And Brexit talks start today. I'm not quite sure how much of it is a foregone conclusion. Bit of uncertainty there from that.
Yeah, I'm not sure what we get today. The people are sitting around the table. They're going to start nailing down. I think this is what they're going to start negotiating, how they're going to negotiate, rather than start the negotiations. So what we're going to find is that everyone's going to get around the table and they're going to decide whether they're going to go divorce first, sort that out, then look at the trade. Last week we had headlines that we weren't going to get a trade negotiation alongside the divorce negotiation. But this is where it starts now. So some of the headlines that could come out could either confirm or dismiss those prior reports last week. But it's going to be a long process. I mean, you and I know they've probably been having backdoor talks already. So they probably pretty much know the basis of what they're going to be talking about. But for the market, it's still a risk event, so we need to be careful of those headlines.
Okay, let's move along to the trade of the day, which should appear any second now. We've got sell euro sterling below 87.19, objective 86.33, stop loss above 87.72. So hopefully the topping out process continuing there.
Yeah, I don't think we're going to see any large moves while the negotiations are going on unless we get some big headlines. So this is one pair that's going to go sideways pretty much and just react to the different headlines that come out from the negotiations and all the other speakers who like to pop up and say they're 10 pence worth. And no, but it looks a fairly decent trade down. If you get that lower level down to the objective 86, that's looking a quite strong support level around that 86 level. So having the profit level just above that 86 level is a sensible thinking.
Right, but really 88 there has been the trouble area, the problem area for this cross, hasn't it? It just it's not able to sustain that at all.
No, not at all. So when you see patterns like that, you've got a low risk trade selling against those highs and then buying against those decent support levels and just be nimble if they break.
Okay, next up we've got trading positions. We've got still sort of 50-50, let's say, on the euro dollar, going more long on sterling. Is that wise given the political situation at the moment?
Well, it's been a big shift, hasn't it? Because we've had some short covering off the lows as the stories unfolded and the Brexit's unfolded. So that's gone to a more neutral position, as has the the CFTC data, which showed those record shorts a few months ago. So it is a bit more of an even market, and people are thinking, okay, Brexit's going to be done now, so we need to think about, is it going to be that bad for the pound or not? So this reflects people who are just sitting in the middle thinking, right, this could go either way.
Right, and the traders agreeing with the euro sterling call there, very, very short of that particular cross.
Yeah, people still think that it's going to be a level that 90 up there is going to be a big level to break, and so a lot of people are piling into those shorts. But as we know, this is the retail side, and sometimes that doesn't reflect the real market. So
sometimes it might be a bit worrying if you're seeing all the retail traders.
Yeah, everyone leaning the same way. You tend to think, well, they either know something we don't, and among the retail traders, that's not usually the case. So you've got to make sure you've got your stops in place for that one.
Okay, let's go on to next section, which is the economic calendar. So it's basically quite quiet apart from the Brexit story and the German Buber president as well talking, but it's not really a big deal, is it?
No, well, I think perhaps Wiedmann he's always a big deal. Recently, he's been turning back towards we need to NQE, we need to stop it. The ECB needs to start communicating that. He's been quite weird because if you take him 6 months ago, he was pretty much towing the party line, Draghi's line, that accommodation was necessary. But you always felt underneath he was just itching to start putting out his hawkish self, the typical German hawk, interest rates need to be at normal levels. Now we've passed that June area where people thought that Draghi would hint at something about tapering, and you just got to wonder whether he's going to start getting back on the train again and saying we need to look at this sooner rather than later and start exiting off. But we've got a big week of central bank speakers. You know, we've got half the FOMC speaking today and tomorrow. Carney's up, Jordan's up today, Haldane's up on Wednesday, I think. You know, there's a lot of central bank speakers up, so it's going to be fun.
Something to look forward to.
Yeah.
That's it for FX Street Currencies in Play. Thank you to Ryan Littlestone, an independent FX strategist.
Thank you.